Good morning. This is George Kachuk for Traders Exclusive with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Here we are at the beginning of August, and I'd like to talk about what's going on in the equity markets. The equity markets continue to be range bound. However, there's plays to be made, and we'll get to that right away. However, I want to just go over what's going on in the equity markets. The NASDAQ is still the leading market. It's above its 50-day moving average. The S&P 500 was below its 50-day moving average last week, reclaimed that average, bounced off its 200-day up above that. Now the small caps and the mid caps, if you look at the S&P 600 small cap index and the S&P 400 mid cap index, had a pretty good bounce last week. They bounced off their 200-day average, but still below its 50-day moving average. So those are still lagging the market. Now the Dow is doing worse. The Dow is still below its 200-day moving average, and the Dow Transportation Index is also below its 200-day moving average. Market breadth is pretty bad. It's been New York Stock Exchange advanced decline line has been sliding for the last 3 months. It dived below its 200-day moving average the week before. However, last week it did bounce back. So basically what we're seeing is some beaten up sectors. We're seeing a little bit of life bouncing back, and we're waiting to see if that bounces for real. Now, one of the sectors that had an interesting move last week was the Dow Transportation Index. It bounced, it says reclaimed it, still below its 200-day moving average, but it had a 4% bounce for the week, and that's pretty big. So one of the stocks we're looking at to make a play there is Virgin America. It's an airline stock. Basically, the stock came out as an IPO last November, broke out of a first stage base at about $40, ran up to about $45, and basically has failed and has been consolidating since then. But what I like about it is it had 3 waves down, kind of bottomed out at about May, and then May, June, July has been basically basing along the bottom. And last Thursday they reported earnings. Now the earnings, they had a huge beat. They reported $1.46 a share, where the street was looking for about $1.25 cents per share. So that came in at a 70% increase on their earnings for the quarter. And actually they've averaged at about 90% over the last 3-quarter average earnings. Revenues are still in the single digits, but that's kind of almost typical of airlines. And one of the things they cited was that fuel costs were 29% less this year than the year before. And also Virgin America is buying 6 more planes. So what we like about it is that it's bouncing off this bottom. And Thursday, after they made those announcements, volume was 4 times average. It came through the $30 level. Right now it's trading about $34. We're picking it up in the $32 level. Now, if the stock were to fail, say fall below $30, I'd say the trade's not going to work. So it has a lot of positive things going because it's bouncing with the transportation sector. It's been beaten up, had big volume on Thursday, the day it bounced. However, some of the headwinds it faces is overhead supply. And what overhead supply is, basically all those buyers who were buying from December until now, when the stock was falling from $45 to about $27, they may be willing to just sell the stock at any time the stock pops up, and that creates this overhead supply. So we'll see how the stock does. You know, just realize that if you were to put the stop at about $30 from this range, it's about 12%, so you should position size accordingly. But right now we're accumulating shares, and we're going to see if this trade works. So as always, let price and volume be your guide. This is George Kachuk for RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Good luck trading.